All right, I've welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So obviously doing the video a little later than normal. It is Monday here. But nonetheless, last week markets pulling in just a little bit. And then we came off the lows by Friday. Today is Monday, obviously, and we are continuing to bounce a little bit here. One level I'm watching, at least on an intraday basis, is this 448.51 level on the spiders, which we did gap down to Wednesday. And again, we can see we kind of tested that breakout bar from 2 Tuesdays ago, which has held so far. And above this level could take you up possibly into the 453 area, at least short-term 450, and then maybe the 453, 52 area again. And then obviously a break of this green bar on a closing basis. That gets me much more on the bearish, much more on the cautious side here. But until then, markets are holding up. We do have a few events going on this week. Apple event tomorrow, so that'll be tomorrow afternoon. And Apple's just kind of hanging in there. Did a lot of damage, though, on that chart last week. Gapped down pretty sharply into Thursday before bouncing into the end of the week, but closing below that 20 moving average on the week. And again, looking on the weekly here, closed below the previous week's low. So not a really good sign there for Apple. These events tend to be kind of a sell the news. So if we are up into it, we'll see if it does pull in. I mean, it already has sold off pretty sharply. So it's not like it's high on the hog going into this announcement. But again, just something to watch there. And, you know, we definitely did some good chart damage to it last week. So just keep that in mind. And then, of course, bigger than that, for the markets, we have the CPI number. Interesting little chart here to look at on CPI is if we take a look over here at oil, you're going to see that typically oil does lead CPI, and I know we talked about that last month as well, how the increase in crude futures we're going to likely put us at a higher or a hotter print than the market expected, which essentially did happen. And we've talked about the fact that we do expect inflation to bottom here and start to stick. And again, that did kind of happen last month, and that may be happening again. You can take a look here. So crude tends to lead CPI by a few weeks. And if we look at, previous going back to last year and in 2021, we had the big surge there, and you can see how CPI kind of lags that a little bit. Again, crude's in everything. It's required to make every widget imaginable. So it makes sense here that the increase in crude would potentially take up CPI. Now the market is pricing in slightly hotter than last month. I think it's 0.6 is going to be the month over month. So again, does look like inflation's bottoming here right now. The market looks like it's at least priced that in to an extent. If that number does come in hotter, then we'd probably be looking at a higher likelihood of a November hike. It doesn't appear that the Fed will hike next week. Remember, FOMC is next week for the month of September. So it's not looking like the market has priced that in. But if we got a hotter than normal CPI print, and if crude prices stay elevated, which they have been, again, you could see pressure on that November rate hike. So that's going to be the big thing going into this Wednesday. But again, as far as the levels are concerned, again, really on the downside, you get a close below this. That gets me bearish down to probably 434 on the spiders. There's also a minor trend line right in this area. You could make a case that if we broke that, you'd go and test that area. But again, we're not going to get too concerned with that just yet. But again, we break this on a closing basis. That opens the door for 430 to 435. If we continue to hold up and we get above this pivot and subsequently 450, then we can go back to this little top here. So again, 453.50 there on the spiders. But again, those are the levels we're watching this week, and obviously the CPI and Apple event could be market moving. Also, keep in mind, OPEX week is this week, and it's quad witching. We already had, rumors and upgrades. Tesla getting upgraded today, so that's up 10%. Again, this stuff's not over with. They're going to continue to do rumors, upgrades, these types of things here, and be careful chasing calls this week as well. There's a lot of people buying calls on Tesla now after today. I would be shocked if the market makers are going to try and pay this out. By the end of the week, we could see some theta burn, some chopping, some backing and filling in some of these names that are high flyers, especially after they get pumped early in the week. I've seen this happen many times. Triple Qs here. Again, getting a bid here today, again, as you'd imagine, with Tesla up, although NVIDIA definitely on the weaker side. So a little bit of, intra-sector rotation, tech rotation there going on as you see Tesla there up. But triple Q's here up 1.1% on the day. Again, 380 still going to be pretty good resistance there on the upside. And then on the downside, again, similarly to the spiders, you take out this level here, 366.23 on a closing basis, or even really these moving averages. I think you give it the downside bias to this upsloping trend line, which goes all the way back to the beginning of the year there on the Qs for the Russell 2000. Again, pretty weak showing last week. It is getting a small bounce here today, but nothing to really write home about. Only up 33 basis points right now. You could make a case you got a little head and shoulder there. Still hasn't triggered, so something to keep an eye on. But a break of this trend line, probably takes the Russell down to this gap fill here. So again, IWM on the softer side, and again, it's kind of that Magnificent Seven type story, right? So Triple Q's doing all the heavy lifting, and Russell 2000 on the soft side, and breadth not really the greatest. Again, it doesn't seem to bother the market too much, but again, these are the realities of what's going on right now. But Russell 2000, again, pretty soft week last week. So bear that in mind. Dow also pulling back as well, though getting a bid here today, up 33 basis points as well. Trying to test that 50 moving average again. Resistance still 350 and change on the upside, and then on the downside, 331.45. We take out this pivot, then the Dow can potentially go a lot lower, at least down to, the 331 area. But right now, it's kind of just hanging in there in no man's land. Semiconductors on the weaker side all last week and even today here, even with the up tape. So again, semiconductors definitely showing some weakness. We had that breakaway gap last Thursday, and we have held that low. So 149.93. We never closed below that, but a close below that low is a big sign of weakness for the market. So you guys know I love the semiconductors as a leading indicator. If we take that out, then you really got to hold this area here. You're going to come into the 100-month moving average, not too in the not too distant future, if we hang out in this lower level here, and then of course that upsloping trend line. But if we break that, and I do think we will eventually, like I've been saying for a while, there's a big air pocket and it goes all the way back to this NVIDIA gap. There's no support really between here and down here. So again, just be careful with the semis right here. They could be telling us something moving forward. One sector that has been very strong, IGV, continues to be a powerhouse. Basically went sideways for most of last week. And now basically testing this pivot again. So cloud software holding up really well. It is OPEX week, so it might be due for some backing and filling. It's up pretty nicely here in the last 2-3 weeks, but cloud's still holding up really well, and that should be respected. Dow Transports had a breakdown last week. So again, we talked about this bear pattern on last week's video, and I said this is setting up a bear flag, and we've continued lower. So 1, 2, 3, 4 days. Close out the week very soft. We did get a little bit of a bounce at this pivot, but we consolidated here. So, I would honestly give this, if the market holds up, we'll say 15.5. It could back test that. But ultimately, I think it wants to test 14.8 to 14.9. That 15,000 area, you get a pierce of that. That's really where your good daily chart support there is on the transports. But yeah, definitely could get a bounce to 15.5 and retest this area here in the short term, again, if the market holds up. But not a pattern of strength there on the transports, and they're definitely showing signs of weakness. Could we be headed for a hard landing? It's certainly possible. The market right now has got this idea and has said that we're going to have a soft landing. As you know, I'm not really in that camp. Just does not seem likely that the highest or the most aggressive rate hike cycle ever is going to be consequence free. But in any case, transports here getting a little bit of a bid on Monday, but really weak showing last week. So just keep that in mind. Anyways, let's get over here to the 2-year. And again, you're going to see the 2-year yield, again, held up really well. All last week had a little bit of a bounce, and again, continuing to hang in there. If we start to break these highs, and again, if you get above 5.33, it's going to be a huge problem for the market. So it's really that simple. But again, yields here still holding up. There's a 5-year. Again, make a case that's a cup and handle pattern there. Same thing, same type of look there on the 10-year, and the same look on the 30-year here. So yields continue to be strong. I don't see any problems with them. That doesn't mean they won't do backing and filling. But again, yields are very strong right now, and definitely keep that in the back of your mind as well. XHB here pulling back pretty sharply last week as well. Got a little bit of a bounce here. And now we're actually bouncing today a little bit, but we're still inside of this red. So until we, close above 8404, you could make a case you've got a bearish inside bar there. So if we start to break down, we lose this level here, it's back down to that 78 handle. And then if we lose that, it's back to this trend line here, which I think would be pretty good support there for the XHB, but definitely coming under a little bit of pressure here. Same thing with the ITB there. You see back testing the 50 moving average today before pulling back in, and then VNQ pulling back as well last week. Again, resistance is simple, very simple, 84, and then support is 78. So watch those levels there for the VNQ. XLF chopped around a little bit last week, although these banks are still not that very strong. JPM, a little bit of a breakdown. We talked about the bear flags last week. Same thing on Bank of America, Wells Fargo, Goldman. I don't like the looks on these banks here, and I think they're showing, look at Morgan Stanley. I mean, this is teetering right here on this trend line. You break through that, this is probably down to 76. So just be aware that these banks are not showing a lot of strength here. KRE regionals back under pressure here. Bear flag breakdown last week, a little bit of a bounce Friday. Now coming back in today, there's the KBE as well, rejecting the 20 moving average. So watch those banks. They're showing some weakness. Broker dealers here holding up okay. Trying to put in a little bit of a higher low there and getting a bounce, and we'll leave it at that right now. Resistance is still 510 here. In the near term, if we break through that, we'll say about 485 on the downside. All right, flipping over here to energy and commodities, starting off with crude as always. Again, crude just in a holding pattern. It is a little extended still. I mean, it's, again, going back to the daily, we just went sideways last week, no problems. Actually, we had a bit on, that was Friday, right? Because that was a shortened week, right? So 1, 2, 3, 4. So we were basically sideways to up last week. And then today was sideways again. Again, going into this red bar here, 89, 84, $90 handle. A little overbought. Wouldn't rule out some backing and filling, but again, like myself and Jason have both said, there's higher floors here. So if we pull back, it's likely a dip buying opportunity. Where would your first support be? Well, 83.50. And if we get through that, 77, 77.50, 78 on the downside. Again, we'll see if and when we get to those levels. But again, crude a little rich here in the short term. It's had a nice rally, and it's holding up well. And again, like I said, that's going to put upward pressure on CPI. I still think we're in more of a stagflation environment, so we could see growth slow down, but prices hold up. Again, which is kind of the boogeyman for stocks, but obviously the market hasn't reflected that just yet. But again, in any case, crude holding up. We'll leave it at that there. Look for that 83.50 area on the downside. XLE pretty good. I'm glad I'm doing this video on Monday because I can show you this reversal. Pretty good outside move there on the XLE. Again, I told you last week I would have preferred a little bit more consolidation here. And we got a nice pop and then kind of just went into this pivot. We did close above that red bar high last week, so that's a huge positive. But again, just a little rich here, right? In the short term, it's had a nice run. It should be due for some type of a pullback. First level of support here is 89 and change. There's the gap fill right there, and then probably down to the 50 moving average. These are just short-term levels I'm looking at, but pretty good outside move on the XLE here Monday. And again, going into OpEx quad witch, it's had a big rally, so a lot of things that are in the stratosphere will pull back a little bit, and things that are beaten down can get a bounce, right? That's just kind of the rule of thumb. But XLE, pretty good outside reversal. There's the XOP as well. And then the OIH here, outside move. Well, not the biggest outside move. This is actually still holding up okay. Down just 20 cents, but again, reversing nonetheless here. So again, energy kind of doing this pullback here. And, overdue. It's not unhealthy. And I don't really see any issues right now. But again, just like I said, just a little bit rich here. Nat gas pulled back a little bit, but then bounced off of the lows. So again, hitting that trend line again. Inside, well, little test candle here today. Not quite an inside day. A little test candle there today. Again, inventory number last week, totally mispriced again. And again, that 250 level holding. If we get back above this area, then you can get above, and you can get above 271. Then your next big level is really 280 and then 286. You get above 286, it's up to the $3 level, and that subsequently that 200-day moving average there. Again, still just putting in this big long base on the weekly. So watching that as well. Continuous contract is holding up. All right, uranium here, flipping over to CCJ, continues to hold up. I talked about this last week. Would not be a buyer of fresh long here, again, just because we went into this, you know, the gap there at Fukushima. You can't see it here because it's a monthly chart, but we went into that Fukushima gap with no consolidation. So I think here risk reward favors a pullback. First level will be 35 there, and then 33 on CCJ. But again, still very strong, still holding up really well. I just wouldn't commit new capital at this time. I would wait for a pullback or a correction. Look at URNM though, holding up really well. Made a new high today on Monday. But again, respectively, going into this pivot here with that red bar above it, and it's overbought a little bit short term. Trend is turning up though. So that's the positive here. Again, buy pullbacks on this. Don't chase it. You know, same kind of setup there. If you guys follow the URA, same kind of deal going into this red bar here. Look for pullbacks, and I think that's fine. But right here, I wouldn't commit new capital right now just because of the extension of the move there. DBC holding up as well. Again, we talked about this pattern last week and the last couple of weeks. Nice little inside bar pullback, and it's getting a nice pop here. So good pattern there for DBC. I don't really see any issues right now. DBA, again, coming into that $22 handle, that will be resistance there, 22 and change. That looks okay. MOS, IPI, and NTR also just kind of hanging in there, chopping around. IPI still has me intrigued here, but pulling back a little bit today. But got to get through that 27.50 area if you can. You know, then it's up to $30 there, but nothing's really changed too much on that front. Anyways, into the gold market here, hanging in there. Just a little bit of a pullback here. What's impressive about gold, I'll say, is that the dollar has rallied really nicely, and gold is still holding up. However, if we do take out this level in 1900, this is your next big area, 1825. If we get through this pivot, then it's up to 2000. So really simple action there. Silver, big pump a few weeks ago, and then fading all the way back this week. Could be setting up a little bit of a base here. I still would like this a lot better at 21. That's where I think it ultimately wants to go. And then platinum pulling back very sharply as well. I don't think this area holds. I do think it wants to get down into, you know, 850, 860 into this little box here. That's going to be a level I'm very interested in platinum at. And then palladium continuing sideways here. Nothing really to update there. Copper pulling back into 370. We talked about that as support. Been mentioning that for a long time. And it got a nice bid off of that. So copper holding up a little bit here. And again, I'll give that the upside bias. Based on today, we'll just say 386 for right now. So again, copper hanging in there okay. Okay, lastly, over to Bitcoin here. Nothing really doing, right? So again, not a whole lot going on. We are starting to test these lows, though, and we have based on the weekly. So just be aware of that. Big down move, 1, 2, 3. And we're testing the lows here. I don't know if it's ready to break down yet. Again, remember, it is OPEX week. It's quad witching. So they could, you know, pump this down to get some puts on board and then push it back up. But either way, the longer we base in front of this level, the weaker it gets. And the more likely it goes down to 21.5. So that would be, for me, I wouldn't touch it until that level. But Bitcoin is in a little bit of trouble here. Right now, we'll see if it gets a bid later in the week due to OPEX. Okay, lastly, just checking in again on spiders here. Again, we're pushing up against the highs of the day here, essentially. Again, Russell 2000, you can see not really doing a whole lot. Short term, this level here, 448.51, could give you the upside bias to 450 if we break through that. And then, of course, this level right here. But again, Apple event tomorrow, that will be market moving. Apple, a lot of damage done to that chart last week, even though it did bounce off the lows. I don't like that breakaway gap. You know, if you start to lose these pivots, it's really down to, I would say 155 is your big level there. Then obviously CPI will be a big deal going into next week, or excuse me, into Wednesday. And that number seems to be on the hotter side, or at least that's what the market is expecting at this point. So anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.